Palantir just crushed earnings, and these three stocks could be next. Joining us today is Navellier with InvestorPlace. I am so excited to talk about the stocks that you have for us today. You have three names that still have earnings coming up that could have similar reactions to what Palantir stock just did overnight. So let's start there, Louis. Let's talk about what Palantir has been doing since earnings were just announced.
Well, it's, of course, gapped higher because it provided incredible guidance and their sales were stunning. But Palantir is an AI applier. Not everybody can monetize AI and make it work. And, when you invest, it helps to bet on billionaires. Alex Karp is one of the guys I bet on.
Yeah, I know this is a name that you've been following for a little while. I think there's something to talk about here with Palantir. Palantir's had kind of a hard year. It hasn't been doing that great, performing that well. It had a little boost back in October. Talk a little bit about the shift that we're seeing in the market starting out 2026 and how that impacts Palantir.
Palantir obviously has been attacked by short sellers and the media because Michael Burry was had put options on Palantir and Navellier. And so that started a narrative in the fourth quarter that kind of questioned the valuation. But I always look at forecasted price earnings ratios, not current. Based on the forecasted price earnings ratios, Palantir is fine. I've got it at about 38 times forecasted earnings, but I'm looking out 2 years.
Yeah, and I think this earnings report for Palantir shows that growth is absolutely coming. And this isn't the only stock, and that's what this video is all about today. We're talking about companies that have a lot of momentum going into earnings and have a lot of that forward, future-looking growth. So those are the three names you're going to share with us today. But I want to talk about one other name. So Palantir is an example of just last night, reported earnings, showed that strong future growth potential, and we saw the stock react. That also happened in another name in a completely different industry that we've been seeing a lot of momentum in, and that's manufacturing. Talk about that other stock that we saw a big pop in just overnight.
Yeah, that's Woodward, WWD, make a lot of aerospace components and gas turbines and all that good stuff. So they blew it out of the park, guided higher. I've had this stock for over 2 years, and the aerospace business is very, very healthy, not only because Boeing had record orders, but you have all the space exploration going on. This is a very good stock right now. I've had it again for a couple of years, but the beat was huge, and the guidance was great. And that's what you have to do. You have to beat. You have to give good guidance. We've found all these stocks due to positive analyst revisions this year. This year is for the S&P is going to be a double-digit earnings growth all year, every quarter. But the companies that have these positive balance revisions are definitely attracting the capital.
Yeah, I know those positive balance revisions are just some of the metrics you look at when you're researching companies like Palantir or Woodward for your subscribers at InvestorPlace. If you want to dive into Louis' research on these stocks and many others a little more on your own, just check out the link in the comments or scan the QR code to learn more about InvestorPlace. Now, I want to get into the three names you have for us today because like the two stocks we just talked about, these three companies all have really strong fundamentals and momentum heading into earnings. Let's get to the first company that you are watching ahead of their earnings report this quarter.
Well, Vertiv, which is VRT, they do make the water-cooled rack systems in the data centers. But Vertiv is up and coming and has a great surprise history. And the data center boom is continuing. Orders are up 20 to 35% quarter over quarter. Year over year, they're up 50 to 65%. So anybody that supplies the data centers is doing very well. And Vertiv has been a great play for some time.
I mean, this company has had incredible growth over the last 5 years, up over 800%, almost 850%. But that raises a question for a lot of investors when they look at a stock like this, really wondering how much of that growth could still be ahead and how much might already be priced into the stock right now.
Okay, so I grade stocks fundamentally. One of the things we grade them on is their earnings surprises. And Vertiv looks very good there. So I would be grossly disappointed if it didn't have at least a 15% earnings surprise. But not only must they surprise, they must guide higher. That's really the formula now. You have to beat on sales. You want your earnings to grow fast in sales due to margin expansion. You want to have positive analyst revisions in recent weeks. Then you want to beat and you want to guide higher. That's the formula. And I had this 8-factor fundamental model scoring the stocks, and that's how I find them. But essentially what we're doing is we're surfing the institutional investors out there. The analyst community is a herd. They kind of move like lemmings. And so you just want to get on and ride them as long as it lasts. We typically hold stocks for well over a year because the analyst community is slowly discovering these stocks. There's just no no sign that the data center boom is gonna stop anytime soon, so, we're having a lot of fun in that sector.
Yeah, especially in this sector with AI, anything related to AI, the analyst revisions are constantly coming and changing for these names where they're trying to figure out that valuation. Excited to see what comes out of Vertiv's earnings report, which is just next week. So just barely a week away for this one. Could see some potential moves. We'll see what comes out for this one, but it's great to know this is the first name on your list that you are watching for a potential earnings surprise and some stronger future guidance for that name. Let's get on to the second company on this list today. What's the next name you have for us?
That's EMCOR, EME. They also have a booming data center business. They're not quite as strong on earnings as some of my other data center related stocks, but they're steady, they're reliable, they're predictable. They obviously make important components in the data center. So I'm very, very comfortable with them. That's kind of a blue chip one, to be honest with you, but it's in our growth investor letter, and we're very, very proud of it.
Yeah, I think that's an important distinction here. A lot of times, especially on this channel, we talk a lot about these growth stocks that are more risky, more speculative plays. They have a lot of volatility. Well, you see that same kind of volatility with a stock like this. This is a ticker, by the way, I don't think we've actually talked about on the channel before. So thanks for talking about it. But do you expect to see volatility in a name like EME?
No, I expect them to beat. And I expect them to provide good guidance, but their sales and earnings are less spectacular than something like a Vertiv or a Palantir. They're smooth and steady, very predictable company.
Yeah, this name is very solid. And I think I want to hear your opinion, Louis, on diversification in your portfolio. Again, we have a lot of growth investors who have a lot of those more speculative names. But when you're talking about investing in AI, how important is it to have some of these more steady blue chip names also in the mix of your AI investments?
Oh, it's very important. We recommend investors put 60% of their money in conservative stocks, about 35% in moderate risk, and only about 10% in the really high risk ones. But you do have to concentrate on wherever the money's flowing. And so, to be honest with you, that has been in the data center stocks, and we have several. That has been in the AI players like AppLovin and Palantir. Once we step out of that area, Eli Lilly's an oasis because they're dominating the GLP-1 drugs. They're onshoring their manufacturing. They're beating Novo Nordisk. And then, to be honest with you, I have 20 gold stocks because gold was up 64% last year. You have to go where there's money flow. What makes a stock safe is money flow. The real thing that makes a stock safe is just persistent institutional accumulation.
I think that's really good indicators and good advice for investors to consider that diversification and how to spread things out. You mentioned you have 80 stocks that you follow. Again, if you're interested in looking at Louis' entire portfolio and his recommendations on InvestorPlace, we have that QR code in that link. But I do want to get to the last name you have on the list, and you've already kind of hinted towards it. Let's talk about the third name that you're expecting to have a really good earnings report still ahead yet this season.
Well, NVIDIA is going to be the grand finale, and their sales are ridiculous. They're over 70%. The Vera Rubin chip is now being made. They don't deliver to the fall. That's 5 times faster, 10 times more energy efficient. There will be a replacement cycle to get new chips. And then after that, they really can't make the chips much faster because they're kind of approaching the atomic level on the circuit boards. And it's kind of hard to split atoms to make chips faster. So NVIDIA's is a leader in quantum computing. So it'll be interesting to see. I do think to be a successful investor, you have to bet on some of these billionaires. So in addition to betting on Alan Karp, I've bet on Jensen Huang at NVIDIA. I love Jensen. He's just a great guy. And one of the few founders that can really continue to run his company as it gets big. Now, NVIDIA does face a physics problem. It's bigger than the British Stock Exchange. It's bigger than the French, German, Italian stock exchanges. In fact, it's bigger than the last 3. The market makers out there, the Citadels, the Jane Streets, they write a lot of call options on this stock. So sometimes what it announces, it doesn't always go up because they don't want to fulfill those options. But it's ridiculous. Its operating margins are approaching 70% after taxes. This is an unbelievable company. And the fact that it still has sales and earnings momentum at its size is just unbelievable. So I'm a big NVIDIA fan. This is my second time in NVIDIA. I was back in it almost a decade ago, and then I got out, and I've been in it now, and I'm up well over 4,000%. So we have no intention of selling it. In our managed accounts, it's up to 18% of our portfolio. So we really do like this stock, and we love monopolies.
And you just added a lot of reasons to get into NVIDIA right now. And I love that you mentioned that potential for the stock to not pop like we saw in Palantir today, because we've seen that with NVIDIA, even with the blowout earnings. I want to talk about getting into NVIDIA now as a potential. It is down right now. Why is it down? You mentioned so many positive factors. It's down about 11% over the last few months. Why is that?
So we had a narrative in the fourth quarter. They noticed that Michael Burry, a famed short seller, had bought put options on Nvidia and Palantir, and it kind of threw cold water on those stocks, and an interesting narrative developed for a few weeks in the fourth quarter, and we had a lot of short covering in the fourth quarter, big rotation into things that weren't earning money. But earnings season is Judgment Day, and we go in every earnings season locked and loaded, and we expect the earnings announcements, the positive analyst revisions, the strong guidance to shore up all the stocks. Again, NVIDIA, because it's so big, and the market makers are making a lot of money just writing naked call options. And so when you write an option, you collect free money. And if they have to exercise the option, then they got to scramble by the stock. The life gets more complicated. So a lot of them really don't want the stock to go up after the earnings, but NVIDIA always meanders higher because it's a bellwether, and they have really no competition. On our own shows, we've had friends on that are AI chip developers and things, but no one does the regenerative machine learning that NVIDIA does.
Yeah, some really good names there. And an interesting point about NVIDIA not having any competition, because in our analyst, Thomas Hughes' latest February stock picks, he started out with AMD on his list, saying it could actually, with its new product launch, give NVIDIA a run for its money. Check out that video if you haven't watched it yet. Thomas's stock picks and his contrary approach is really interesting this month.